know everybody keep asking me. That's one of my most common questions. When is it going to be another crash? When is homes going to be slashed in half? It's not going to happen. Next one. Foreclosures will never go back up to 2010 levels. Back then, around that time, a lot of people got into these adjustable rate mortgages. They was able to get in. Low interest rate mortgages was probably $1,000 a month. Now, the Fed reacted, interest rates hiked up. Now people's mortgage rates was $5,000 a month, just like that. And, of course, that's what caused the huge foreclosure market. A lot of banks took back properties, sold them cheap, things like that to kind of recoup their assets. It's not going to go back with, I guess they kind of learned their lesson. So, yeah, it's not going to go back to those levels. Next one, please. Just over 50% of California residents own at least one home or home was passed down to them by their parents. Next one. Home ownership has great tax advantages. There's lots of write-offs you can take advantage of. There's always talks about, what the tax breaks that the rich got, the wealthy got, but as a homeowner, you do have similar tax advantages that you can take advantage of. Next one. And a peace of mind, right? Just achieving home ownership and just having your own space, your own sanctuary. That's just the greatest feeling of all. Be able to come home and you can just relax. Whatever you deal with out there in the world, it stops at your door. You come home, you relax, you kick your feet up, and, can just enjoy. You ain't got to worry about people above you, stomping, kids running around, unless it's your own kids, So, yeah, that's the facts. Next one, please. So, what impacts your process on becoming a homeowner? Next one. All right, let's go. Keep going. First one, income, right? Next one, credit score. Next one, home price, interest rates, market, buyers or sellers markets, the economy, of course, and cash liquid. How much cash do you have reserved? Keep going. And, of course, you, right? You and the decision that you make to proceed forward with the home buying or selling process, it's all up to you. What do you want to do? What is it that you want to achieve? Is homeowner something that is on your bucket list, right? Because that's something that was the American dream back in the day. And it starts with you. It starts with you making a decision, your mindset, getting your mindset right, getting your finances in order, and just taking control. Next one. All right, steps in the home buying process. Next one. All right, so what are the steps? Let's go. Get in touch with the realtor. That's step one. Keep going. Get pre-approved, right? So that's working with the lender. After they go over your finances, me as a realtor, it's not my job to know how you make your money, things like that. That's between you and the lender. And once you get pre-approved, that's all I need to know is how much you're pre-approved for, how much house you're looking for, and it's my job to go find it for you. Go look at homes. Submit an offer. Keep going. Open escrow, of course, after offer acceptance. Conduct all inspections. Review all disclosures. Keep going. Sign closing documents. Deposit closing funds into escrow. Get the keys. Next one. Do your dance. Hey, So this is just the quick steps. Like I said, you get pre-approved. We go look at homes. We submit an offer. If you like a home you like, we'll submit offers on the terms that the lender has laid out for you. And then escrow is just a third party. That's like the middleman, where they'll handle and facilitate all of the closing for you. Title, they pull title on the property just to make sure there's no liens on it. Certain liens like garbage liens, if the previous owner hasn't paid the garbage bill, that's on title. That affects your title. If you have any type of, let's say you did some some renovations on your property, and you haven't paid the contractor. They can say, okay, well, we're going to go to the county and we're going to put a mechanics lien on the property. And it does affect your title. And it's something that will need to get cleared up. Whatever you owe, escrow's job is to catch things like that, because stuff like that should not be passed down to the buyer. It's something that the seller needs to take care of. And escrow, when we close escrow, if the buyer wants to proceed forward, they'll say, okay, well, seller, you have to pay those funds. So whatever it is, that's being taken out of whatever money you're going to get once this transaction closes. So it protects you as the buyer. It's really good what escrow does. Of course, conduct all inspections. So we do have things like inspection contingencies, appraisal contingencies, as well as loan contingencies. These are contingencies to help you as the buyer to make sure you investigated the home, you get an inspector, you get somebody in to take a look at everything to find out what's wrong with the home. Because a lot of times, and even in my experience, it's really what you can't see. You go in, you look at the property, you say, oh my God, oh, the walls is nice, oh, okay, stair, okay, everything looks good. But what's in that crawl space? You know, are there termites? You know, things like that. One house that I sold in Fairfield, it was a whole ecosystem under that house. They had rats, raccoons, possums, everything living up under there. And I'm like, they got a whole habitat. They had bats in the attic. And I'm like, what kind of place is this? So, you know, it's good because, see, that's why we get these inspections done, because you want to know what is it about this house that you can't see. So we need to get somebody in there to inspect that crawl space, inspect that attic, and to know what's in it. After all that's been taken care of, if you say, okay, once that's done, that's taken care of, that's remediated, you as the buyer, do you still want to proceed forward with closing? If you don't, you have an inspection contingency that will say, you know what, I don't like what I seen. It does look nice, you know, to the eye, but all of what was found, I don't think I want it no more. You can back out of the deal, you get all your deposit money back, and you can go look for another one, find something a little bit better. So that's why it's important. I would never advise my clients to waive any contingencies, because you want to know the home. You got to, because you don't want to get caught with no surprises. Once that home closes, that's on you. Whatever you find, that's on you. So, of course, signing closing documents is, you know, you go to escrow, sign a closing documents. It's a lengthy process. Of course, like I said, you get the keys, and then you do your dance. Use the homeowner. Congratulations. Right. Next one, please. All right, lending options. Next one. All right, so we're going to just touch on three of them, the three main types of lending that's out there. Of course, there are more, but the three main popular ones we're going to touch on. So first one is conventional loan. That's just your normal loan, nothing special. So minimum down payment, 5%, 3% in certain cases. It all depends on how much cash you have liquid, right? So if you have, let's say, if the minimum down payment 5% is, let's say, $10,000, but you got $25,000, $30,000, you know, reserves, that does help you. So the lender will say, you know what, you only need to put 3% down. You know, your credit score is fine, everything is fantastic. You know, we'll work with you for that. Next one, please. Minimum credit score for conventional loan as of today is 620. You only need a 620 credit score to be able to qualify. Next one. Loan amount. So loan amount, it varies by county, and it's just pretty much they put a limit on how much can we lend in the county based on a minimum down payment, based on your credit score. We can go up to a certain amount. I want to say recently they just increased the amounts. So it's kind of closer to the $1 million range because, of course, home prices in California is just ridiculous. So the state is kind of reacting to it and trying to at least give more people the opportunity to become a homeowner. So they did increase the amount. Next one, please. So rate, 30-year fixed, adjustable options are available. So that's what I said about, the 2010 crisis. A lot of people was getting those adjustable mortgages. They are starting to kind of come back a little bit, but it's always best. I'm always advise my client to get a 30-year fix. You want to lock in that interest rate to where it's not going to change. Next one. All right, so next one, FHA. So that's first-time home buyer loan. It is a government-backed loan. Next one. Minimum down payment, 3.5%. Next one. All right. Rate, 30 years fixed or less. You can do a 15-year if you can. If you want to get that mortgage paid off a lot sooner, they do have 15-year options available for FHA. Next one. Minimum credit score, 600. So, that's something that they really want to help first-time home buyers. Look, if your credit score is not all that good, all you need is just a 600. Next one. So loan amount varies by location and must be within FHA loan limit, county FHA loan limit. So kind of similar with the conventional. For FHA, they really are strict on that because, for first-time home buyers, the common thing is just access to capital and the availability as far as the pricing. So just with the conventional, they did also increase FHA loan limits in the state of California. So I want to say that's kind of closer to the $800,000 range to once again help first-time home buyers be able to, who can afford it, get to that price point. Next one, please. Condos. So, of course, one of the primary things that FHA first-time home buyers go for is, of course, condos, right? They just get their foot in the door, get a condo, work their way up to that single-family home. But condos have to be FHA approved. They have to go through the process with the government to be an FHA-approved facility. Now, there is a way around it. Now, let's say we go out, you want to look at a condo, you like the condo, you want to submit an offer, but it's not FHA approved, we can check with the lender. A lot of lenders do what they call FHA spot approvals, where the complex might not be FHA approved, but they can have that unit, whatever unit that you're trying to get, they can just do an FHA spot approval for that unit by itself, not the complex. It is a lengthier process. They got to go through the government, the channels, things like that, but it's a possibility for you to still get into that condo complex that you love under FHA. Next one. VA, Veterans Administration. So once again, it's a government-backed loan. Of course, it's catered to our veterans. Next one, please. So minimum down payment, 0%, right? The government takes care of their veterans. You ain't got to put nothing down. You don't have to worry about that. Next one. So rates, of course, is fixed, 15, 30 years. They do have adjustable options available, but once again, I would never advise my clients to go the adjustable way, especially under VA. You're putting nothing down. It's just get it fixed for 30 years, and you're good to go. Next one. Minimum credit score is 600. That was something, I want to say it was higher. It was around 640 not too long ago, but of course, during the pandemic, it was a lot harder for veterans. You had a lot of veterans on the street, things like that. They made it a precedence to get our veterans, those who fought for our country, died for our country, became disabled, whatever, service, who really served our country. We want to get them in. We want to take care of them. So they dropped that to 600. And, of course, it really helps. It got a lot more veterans off the streets into homes. And, yeah, it's beautiful. Next one, please. Loan amount. So loan amount, of course, varies by location and the borrower. A lot of lenders offer different incentives and options for veterans, especially when it comes to buying down the interest rate, things like that. They might help you towards closing costs. So it all depends on the borrower. Next one, please. And it's a great option for new builds in 55 plus communities. The 55 and up communities take VA veterans. They pretty much put them to the top. You know what I'm saying? They make sure that they will take care of you. So it is a great option, and especially, like I said, with new builds, because it's brand new. You know, you ain't got to worry about, so VA is one of the most strictest loans when it comes to if you're buying already a built house, right? So if it's something like when it comes to the inspections, that house has to be brand new. Their roof got to be good. Mold, things like that has to be done. They will not lend on that house if that house is not spick and span brand new. So I always advise for my VA clients, new builds is the way. That way you ain't got to worry about none of that. It's more cleaner for VA, inspection, everything. The process is way more seamless. Next one. So other options. So like I said, we do have other lending options available. So of course you got your adjustable rate mortgage, you got your jumbo loan, and your first and second combo. So if you are interested in learning about the other options, just please get in contact with me, and I will lead you to the proper people, which is a lender. So now, down payment assistance. Next one. So what is down payment assistance? Next, please. So it's a program that offers loans and grants that covers part or all of a home buyer's down payment and closing costs. Next one. So there's over 2,000 programs available nationwide. Next one. So courses cater to those with low to moderate income, first-time home buyers, and buying a primary residence. Next one, please. So it can affect your pre-approval amount. So this is something that, if you want to use down payment assistance, it's something that you really need to take into consideration, because let's say you get an FHA and they say, okay, we got you pre-approved for $500,000 or $400,000, and you say, well, I'm gonna need down payment assistance. I don't have a lot of cash liquid to close. I might need some down payment assistance. You can do it, but it's going to drop your pre-approve rate down to maybe by give or take 50,000, because when it comes to down payment assistance, it's basically like an extra risk that the lenders are taking on. So just to kind of minimize that risk for them, they're going to drop your pre-approval amount down a little bit. So that's just something to really take into consideration. You might not going to be able to get into that $400,000 or $500,000 range anymore unless you have the difference in cash liquid to make it up. Next one, please. So income limits, of course, vary by location. So they do have something called a area median income. So if it's within 50% or lower of the area median income, you do qualify for down payment assistance. And of course, in the Bay Area, even in San Francisco, people who making $100,000 a year will still qualify for down payment assistance just because the area median income is so high. Next one, please. All right, so types of down payment assistance programs. Next. Grants. So that's money that never has to be repaid. Next one. Loans. So second mortgage that are paid monthly with your primary mortgage. Next one, please. Deferred loans. So that's a second mortgage with deferred payments that only have to be paid when you move, sell, or refinance. Next one. Forgivable loans. So second mortgages that are forgiven over a set number of years, 5, maybe 15 or 20 years, will only have to be repaid if you move, sell, or refinance too early. Just a quick one on this. California did pass legislation called the HFA, where that was pretty much the forgivable loan. So they say, look, we want to get first-time home buyers in. We want to get them the option to become a homeowner. So when it comes to, of course, the main thing is access to capital. So they say, look, we'll pay your closing costs, all of your closing costs, down payment. It'll just be in a form of a second mortgage, which they call it's like a silent second. As long as you occupy the house